do we have here? We have okay, okay, Joan is here. Okay, let me take actually again, I will put you as co-host so you can accept people coming in the waiting room, okay? Is it okay, Ashley? Can you hear my voice?
Again, can you tell me how do I accept people? I had a
You don't
problem
know
with
how to
that.
do it?
No, well, I had a
Okay.
problem with
No,
that
it's
last time.
when you're in the call, when I let me show you. Okay, now I'm going to put you as a co-host.
Okay.
You will see the notification on the you see the participant list, or the participant names, right?
Yes.
Yeah, you will see people, it will pop there, and then you can just press accept
Okay.
every time.
Got it.
Okay.
Got it.
Okay, try this one. There's someone there. I want to see if you can do it. Do you see someone? Oh, okay. Did you accept? Okay, but now, okay, good, 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 good. Hello, David. Is David right? Nirvana Lizaraga. It's David, right? Or not? Okay. So I don't know the name exactly because then sometimes the usernames are changed, but it's okay. So hello again, everyone. Let's start the market analysis. Um, so let me tell you exactly. I tell you that every week because I wanted to sink in, right? Every time we have a candle like this, it's not enough to know what the next week would do. We also have to look at few more candles before, maybe one or two, depending on how the price action um, printed the candles. And when you have this is the previous week, you look at the one before and the second before. Now you kind of see what price is doing, okay? And you can anticipate according to how price closed in comparison to the previous and the week before. It can be the day or the week. This is just a candle. It's the same principle for every time frame. If you try on daily or weekly, you will see the same thing. Okay. So when I come on, let's start down here, USD CAD, for example. When you come on USD CAD, what do you have on USD CAD? Let me go on daily first here and then clean everything. When I go on daily, you can see something here. Let me show you. Last week on USD CAD, it was a sell. Look at Monday. You see how Friday closed here. I need a pencil. Yeah, here. You see how the week closed. This was Friday. This candle here is Friday. And after Friday, you would expect price to reverse, right? Why? Because we did not break the high. We swept it and then we came and closed inside. Even if we are bullish in this situation, we must ask ourselves, where are we going? Why? Because when it rejects, it's supposed to close bearish. Okay? If it takes the highest point of, let me just show you here. Let's us come closer. If it closes above this level that I just marked, then we know we should continue. We should look for buys. So if it's the daily, we expect the next day to be bullish. But when it did not close above and it came and closed in fake out, so it can close in breakout or close in fake out. When it closes in fake out, what do you expect next? Is to go in the opposite direction. Opposite direction of what? Of this candle, because we are comparing ourselves to this one. Okay. So when I come here now, let me show you, and I see something like this, I should expect, let me show you. I'm gonna show you one that's correct. You can see here, okay? When you have this price close and breakdown, you know we are continuing in that direction, right? Why? Because we took out the highs here and then we closed bearish. So the next day will be bearish. But sometimes when the price close in this with the same color, so it means if it was bearish, it closed bearish but did not sweep or um, like here, it did not sweep. Like let me show you an example. Okay, this one swept. Yeah. Okay, here it's good. It's very good. It swept liquidity, but it closed bullish. Now you will tell me, okay, Emil, so I'm expecting a bearish one. No, you must know where you are. The market phases. Market phases are the most important thing that you can look at on the higher time frame. Why do I say so? Let me show you here. I'm looking for something that I had on my tree. Yeah, let's do it. And the history I have. Yeah, I have it. Sorry. So now I'm gonna show you something. It will help you. It will help you. I want you to understand this because Ashley, can you see the people in the waiting room? Are you accepting?
Yeah, I'm
Oh,
accepting.
thank you. Good, good. Thank you. So what we're doing here, I'm trying to explain to you simple. Just take your notes. It's gonna take 10 minutes and then we do the market analysis. Every time I come on the chart, I don't want to just give you a show and show you how I do stuff. I want to give you the principles behind. Okay, let's combine this candle. Let's do it together, right? I want you to follow. I want you to take notes because I think this time I have the exact words that I explain with because my English sometimes is a little bit rusty. So here you can see this. We have a bullish and a bearish candle, okay? Now, forget about the colors. I'm going to put these two here and I'm going to make a gray candle, okay? Gray candle like this. It's going to be gray. This means it can be red like this, or it can be green like this, okay? So every time you have a wick that is finished, wick as closed like this, and you have a wick, the entire candle is wick and body, okay? So you have the candle like this. Imagine it's bullish or bearish. Everything you need to know is where is the high? This is the high, okay? Where's the low? This is the low. Now, according to how the next candle, okay? So let's call this candle 1, okay? Let's call this C1. This is C1. Candle 1 plus candle 2 will always tell us what candle 3 will do. So every time you come on a chart, the candle you are expecting will be the third one. So you have to look 2 candles before, okay? Look at this. According to how the price will close, if it close in, okay, I'm gonna write it down here. We have breakout and fake out. Let me give it like breakout, and we have fake out, okay? This is gonna give you process on how to look at the higher time frame. So if price close in breakout, it means what? The intention is to continue in the same direction. If price close in breakout, it means the intention is not to continue in the same direction. It's either to go down or to consolidate. Why? Because price have phases. And these phases, I need to show you now, are here, I've drawn some. Okay, I got it. Look at this. What does market do? Do you see that? Market will either consolidate, expand, retrace, or reverse. So you have 4 stages of price delivery. Every price action that you look at will be in these stages. You are not going to create another stage, okay? You will take this and you will understand that this is your reference, okay? So I'm going to draw on this so you can see. Let me draw on it. But I have a pencil. Okay, look. I have consolidation here, right? Consolidation means what? It means price is just moving sideways. It's a phase. There are types of trade we can take in this phase. The next one is expansion. Expansion is when price move in one direction and doesn't stop. Price extend. What is the characteristic of consolidation? It creates the same level on the upside and the downside, and it moves in the range. In a range is like a channel, up and down, okay? Up and down, and it's stopping. That we have a floor and we have a ceiling. That's the characteristic of a consolidation. What the characteristic of an expansion? The characteristic of an expansion is when price move up, and most of the time, an expansion will break structure. Do you get that? When you have a consolidation, we do not break structure. We stay in market structure. But when we expand, we will break structure. Okay? So break structure means we had a high and then we broke that high. And if it does this, what the name of this now? Retracement. Okay? Retracement will be the pause in the market. After an expansion, you will have retracement. Retracement will show you that market is slowing down. There are many reasons that price can retrace. It could be a technical thing, price waiting for a news, or maybe we are closing the week, we are closing the day. So at that point, you know you don't need to trade this, okay? Look at this. There are another type of expansion, but in the other direction, which is called reversal. Reversal is the same thing as an expansion, but only it turn the direction without retracing and without consolidating. It just move quickly in the other direction. When you have that, it's a reversal. Now, let me show you how they move. The first thing you should look for on the chart is what phases have we been through, like the last two, or maybe you could look at the last one. Sometimes it's obvious that it was an expansion. So you can come on the chart, ask yourself, what happens after what? Let's call consolidation C, okay? After a consolidation, you will always have an expansion. Just put that in your head. You will never have a reversal after consolidation. It's not called a reversal. It's called an expansion. Okay? Second thing you should notice here, I'm going to put below the E, there is no expansion without manipulation. So the manipulation can occur after the consolidation or during the consolidation. So it means price can be consolidating and then manipulate during the consolidation, and then it will expand later. Or it can consolidate and then manipulate and expand. Okay? So when you know that, now you have your phases. Always look to trade after a consolidation. It's the best time to take a trade. But what will give you the sign? It will be a manipulation, and then you can take your expansion. Now, after the expansion, you have a few options. Sometimes market will reverse. Reverse means what? We expanded in a key level and then price changed direction. Like this. Key level was here, we changed direction. Now this is a reversal. Okay? Like I said here. Let's go back. No, we know after expansion, we can have a reversal, like here. Okay? We can have a reversal. Let me put here, rev, RV, or we could have a retracement. Now, what is the difference between these two? Reversal means we change direction. Retracement means we pause to continue in the same direction. So both of them can happen after an expansion. And a retracement, okay, can start with a consolidation. So I'm going to put this inside here. Sometime the retracement could just be a slow consolidation moving down, okay, in a channel after an expansion, but waiting to continue higher. So what do we say here? We say that after an expansion, observe what will happen. You can have a consolidation, a reversal, or a retracement. But after the reversal, what do we have? It was an expansion in the other direction. So we still have the same options. So we could have a retracement again or another reversal. Imagine a reversal happening here. We had a reversal here, reversal 1, and then reversal 2 here. Okay? But after this reversal that we saw here, we could also have a retracement, like we said here, because reversal is the expansion in the other direction. So now you know we have expansion and reversal. They have the same nature of movement. Retracement, it's almost like a consolidation, but we are going inside, back inside the range. But like I said, after an expansion, sometime price can just consolidate and then manipulate and continue. Or it can consolidate, manipulate here, and then reverse. But this, I will not call it a reversal. I will just say the expansion higher. And if it was, I will not call it a reversal because reversal come after another expansion. Okay? So if it happened after a consolidation, what do we call it? An expansion. So I'm going to tell you again, we only have 4 phases. The 4 phases in the market, okay, is consolidation, expansion, retracement, and reversal. What I want you to understand is I'm looking for my consolidation so I can trade the expansion. Why? Because the expansion is a bigger move and less stress. This is seek and destroy price action. It will just go take your stop losses out. You need to know how to detect what phases are you in. So when you know you have an expansion, you can expect now a retracement. So you have maybe a fair value gap or an imbalance, how you call it. And when price retrace inside and you see that there's a manipulation that occurred falling inside your key zone, that's how I call it, now you can expect price to continue higher. Why? Because after a consolidation and a manipulation, price will go into an expansion. But sometimes you have something like this, then you have a big expansion taking all this out and then a reversal. What does that give you? All this was just consolidation. That's why I said a retracement could be a consolidation. When you look at it, how is it moving? Is it a going down consolidation or a going up consolidation? And this is almost the basics that you have to know around market structure. Because when you know market structure and you know the phases, price action will be easier to understand. So after every consolidation, price will go into expansion. But you know, before that, we should have a manipulation. Now, after expansion, we have 2 options. Either price will reverse or price will retrace. But if price move in a consolidation again after an expansion, we expect to see another expansion again. And we detect the manipulation and so on and so forth. After a reversal, which is also an expansion, we should expect what? A retracement, like I said here, or another reversal. Okay? So once you start to detect the expansion, you will know what price has done after the expansion. So what can you expect next? Okay. After this retracement, what do we have? It's the same nature as consolidation. We have what? Manipulation and expansion. Okay. I hope that will help you understand the market phases. Okay. This is just small drawing that I made here so you can understand this. Now, as you know the market phases, let's go back to our candles. What do you have here? We have a candle. We don't know if it's bullish or bearish. What do we need to see? We need to see what the next candle has done. If the candle opened, let's say it opened here, you don't know where it's going, right? It moves, comes till up here. Oh, is it gonna stop there? I don't know. Then the day continue, price is printing the candle. Then it come this way, and then it come and close here. What will you have at that moment? You will have a candle that took out these highs. Let me get this one. It came here, right? We saw it. It was here. It came here, created the weak, now come back, created the low, and now close here. This candle is showing that this level refuses to be broken. So if it refuses to be broken, we should expect the next candle, now the candle that we are trying to trade, okay? What will you see? If this one was like opened here, you know this is a bearish candle. Why? Because if this one was bullish, opening here means this is the opening price. And now we closed below the opening of the first candle. If this was a bearish candle, okay, and we opened here, this was just a gap. From here to the open is the gap. So what I want you to understand, if price breakout, what do we expect next candle to be is to continue. But if price close inside, what do we expect is to come on the other side. Okay, you keep that basics. Now, if you combine this with the market phases, you will start to see what other people don't see. Let me tell you, when you have a candle that closed inside the range like this one here, there are two cases. It can continue in this direction only when we had a reversal before, like here. Look, we closed inside. Okay. What was supposed to be the next candle? Green. Good. Now, what happened next? Let me create a straight line. We closed inside again, but look, the reversal already happened. So now what I'm trying to find out is, okay, am I bullish or bearish? We close inside. I just said here, if we close inside, we take the bearish direction. So we were supposed to have a candle like this. Let me take this guy here and bring it down here so you can show you. We were supposed to have a candle like this, okay? But as we know, we had this reversal before. We should have a target. Always know price is moving from a point to another point, target to target. So if we leave this as a reversal, we had this big expansion. Reversal happened here. Where are we supposed to go? We need to target this is the draw on liquidity. This is where the liquidity lies. So market will go in that direction. Even if I see this closing inside, but as soon as it's green, same color, I will continue my direction. Okay. And you can see how price respected what I just said. After that, we closed bearish, we closed bullish, we closed in a breakout. What did price do? Continue higher. After that, what did price do? Close bullish. What did price do again? This is USD CAD. It's not even gold, but look at what you could have taken from the market. After this, we came where the green candle closed below or above. Above, you can see it here. So what am I expecting the next day? Bullish candle. So I'm looking for the open of this candle. Then I will trade inside this small wick to get this expansion of the day. Then I will continue in the same direction. And you can see here, we closed bullish with a big rejection. What did send the rejection? If you go on the line chart, you can see it here. This was a key point. When you reached it, market rejected our price action. So here I could expect to take a sell. I could expect to take a sell. Why? Because I think, okay, price stopped here, rejected, but I can take the next day to continue lower. But look at what day it was. It was Monday. Okay. So sometimes you'll be wrong, but after practicing, you will start to notice how price was bullish all along. We closed almost above it. What did price do next day? Bullish again. So you could have been wrong. Maybe, let me show you where. Here, bullish, bearish, bearish, right? You are right. And then here, you tried to take another bearish one, but you were wrong here. What day was this? Monday. That's why they say don't trade on Monday, because price will sometime reverse on Monday or Tuesday. When you look here, you see, okay, I was wrong. So I have one trade, correct, 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 correct. Then I miss one. But then I understand now that we change direction. Then I hear I'm correct because I'm targeting this high. I'm targeting this high. Correct. I'm targeting this high. Close above. I'm targeting this here. Correct. I'm targeting this. Correct. How many times will you fail? So right now, after you see this, you won't care losing trade because you understand the direction. So we are going to go and do this now. So from what we see here, from what I just explained, which candle will form after this? Because before we had a bearish and a bearish that closed bearish. But remember, is it an expansion or not? It's not. We did not break any structure. But here, look, is it an expansion? Yeah, because we broke structure. So I'm expecting price to continue. What did price do after that? Consolidate with a manipulation. And then manipulated higher because of this key zone, and then reversed. But this is also called an expansion to the downside. So after this expansion, what do you expect? Maybe price will consolidate, but we will know on Monday and Tuesday. Sometime Monday and Tuesday will do this. It will come lower, create a wick, and then come and close inside. Now you know you have a reversal. Okay, same as we did here. After these lows, we know price reversed. Why? Because we reached a zone last bearish move before we move up. Okay, so you only need to understand this so you can start looking at the chart and trying to guess the next candle. You combine this with the market phases, and then the only two zones you need with this is just to mark your SND. That's how I call it. It's simple to say. I don't want to explain too much stuff. SND is the last candle without the move that broke structure with impulse. Every time you see a candle that is opposed to a break of structure, like here, you can consider it a supply or demand zone. This one did not hold. Why? Because you also need to understand liquidity. Okay, but this don't do it on the daily time frame. This, what I'm just explaining to you, I think we already went through it because I explained to you in the past how the markets react to the zones. You mark just the extremes, like here, the last candle that gave us the bearish impulsive move came back to revisit it, and then from this we could expect after the candle turning in the other direction that we will be bearish. This was a Friday. Market closed. We already know it's just a retracement, and then we expand again. And you can see it repeat everywhere here. Okay. This one, the one that I'm showing here, let me show you with an arrow. Yeah. This one here. If we go back in the past, this was another move before we push with impulsive price action. And then price came here inside. What did you have? You had a bearish move. It's the only moment you can contradict yourself, because when you see price breaking lower, closing in breakout, and reaching this zone, this is a reaction zone. What do you expect? Price to continue lower? It can. But if the next day close bullish, you know we have reacted to this zone. Look at what you have caught here. So you need to have patience. You can mark on the daily time frame all the levels that are near your price action. Like here, I can have this one marked already. What do you expect price will do here? I can start to see the price play out. Maybe Monday will come lower, close inside, or close bearish. And then Tuesday, refuse to go bearish and close green. Now, what do you expect for the week to come? You will expect a bullish move. Okay? On USD CAD, I'm not talking about the days. I'm expecting to see the week make a reversal here. When I will go on a lower time frame on Tuesday, maybe I can find a trade and catch a trade that I can catch a trade that will give me 1 or 2 days of price action, like it happened here, like it happened here, like it happened here or here. Everywhere you can see price rejection direction inside of the SND, like I called it. It's just an engulfment, but you understand on a higher time frame, this can guide you. You also have the second zone that you will mark. Let's just clean this chart. It's the imbalance. The imbalance is also a zone. When it's touched, price can reverse. What do you see here? Price came, reversed here, closed inside. What do you expect for the next day? Bullish. Look at what it did. This is 1, 2, 3, 4, 5 days. You are right about the direction. So you don't need to be in the rush. You need to have patience. Here we have green candle touch, close bearish. Look at the days, 1, 2, 3, 4. So once you find the first day that have reversed according to a zone, you have the two types of zone. You have the imbalance and you have the supply or demand zones. These two zones will tell you where price will change direction. If price is not in these zones, you just obey to the rule, which is if I close in breakout, I continue. And if I close in fake out, I reverse. Okay? Knowing where you are going and asking yourself, where am I according to these zones? This is how I look at the price on the daily and weekly time frame. So as I just told you, I know we were bearish, but USD CAD, we are arriving in this zone here. So what I'm expecting to see now is to see a candle touch here. And if I see a confirmation reversing here, then I will continue in that direction. But if price comes back, let me show you, comes back here and break and close below it, what do we call this? A break of structure. And what do we expect? We expect price to continue lower. Why? Because we had the zone that should reject price, but now we continue lower, like here. Price did what? Price broke through it. And what did we do next? We continued bearish. Okay? The main theme was bearish. Here, everything that's pushing in the opposite of that direction is a pullback. It's a retracement. Now you understand it. And now, even here, when I had this break, once I had it, I was no longer expecting for this zone to reject. I will continue higher, respecting the rule, which is if I close in breakout, I continue in that direction. Look here, even here, let me show you on this candle. Here, you had a reversal. So price did what? Price came up, took out, close in fake out. It did not break out. It fake out, but we broke out on the opposite side. This is a strong confirmation that we should go on the other side. And what did price do next? Bearish. But you will tell me, okay, but this was a bullish move. I told you Monday, this is a Monday also. Monday will oppose himself most of the time to the direction of the week. And this was just a pullback. And what did happen after the pullback, which is the retracement? We had a sweep. This sweep gave us 2 days of bearish price action, and we could have gone until here. But price rejected here again. Why? We reached another key level. When you a key zone, when you reach a key zone, you ask yourself, what did price do? We were bearish, and then it closed bullish. So now I'm bullish until I reach this level. I'm not gonna sell. Let me show you here. Until I reach this level here, I'm not gonna sell. I will keep buying and buying and buying and buying. And this is how I'm telling you for today what I think USD CAD will do. It will come in this zone and reverse from here. This is on the daily time frame. So some people will trade Monday bearish, but they can fall in a trap because Monday will reverse on them and maybe touch their stop losses. So I will observe Monday on USD CAD. So in your journals, just write down. Let's look at the weekly. The previous week was an expansion bearish. We could continue in the same direction, or price could stop here. But let's see how Monday and Tuesday will play out. But I already know on the weekly, I'm expecting to see a bearish candle. So it could start, continue lower without stopping. But we know why. We know because of the closure of the third candle, which is this one here. This was the previous one, and this was a pullback. A pullback that stopped inside of this level. We are going from here to another here, which is it's already tested. So price could maybe break it, but we know we move from, let me call it now, you can just call it internal range liquidity and external range liquidity. I call them external point of interest and internal point of interest. You can call them key zones. You can call them imbalance and order block. You can call them whatever you want, or reaction zone. Some people call them reaction zone. So we know price is moving from here to here. This is a weekly time frame. Daily time frame, we have already started a bearish move. So if we're trying to continue lower, now remember, if we're trying to continue lower, what would price do? Price will open bullish Monday and Tuesday, and then continue lower to finish the week. But if we start bullish and reject, we start bearish, sorry, and reject from this, because we are trying to have a bullish week, price will create the lowest on Monday and Tuesday, and the week will be like this. So you already know what you are expecting. If price react here and create a reverse on Tuesday, then I'm going up. But if price start going up without touching this level, I know this level will not hold. Why? Because it's just a pullback inside here to push price down. These are the scenario on USD CAD. Let's go now quickly on every pair that we have here. Okay, I will probably not suggest to trade Euro USD. Why? Because we just broke out with an expansion. So I'm expecting to see price to chill a little bit, or like I said, if price want to continue, we will see a bearish Monday like this, and then price will continue higher. But if price has to reverse, it's not going to reverse on this candle. It must create a big wick like this. That's why I will mark this as my external range liquidity. Why did I mark it like this? Because on H8 or H4, you will notice that this will be an engulfment. It's still a wick here, and on lower time frame. At some point, price pushed up and then reversed. Let me go and see here. We still have a wick. So it was a news. This was a news. News only created wicks like this because I'm going on an M15. And if we saw it play out, yeah, you see, it's an engulfment. It's a bullish move before the drop. It's this one here. But on the daily, it's just a wick. Okay. That's why I marked it as my external liquidity zone. And down here, I have another one, which is internal. So this internal will be the target if price reverse here. But if price comes up, create this high, what do we expect next? This. This could be Monday and Tuesday, and price will reverse. Even if we don't finish the week, we will have a target. Okay, so on Euro USD, it could be like this, continue higher, and then reverse from this big wick here. That's rejected price. Or if price start by going lower, like this, Monday and Tuesday, we go lower. What do we have? The wick will probably go finish inside here. Why? Because we already have an expansion. What comes after an expansion? Retracement or consolidation. Same thing on GBP USD, big expansion. Let me show you here. Big expansion. What do we expect after expansion? A reversal, a consolidation, or a retracement? Are we in a zone of rejection? Yes. And if you don't want to mark this, you can mark the last bullish candle before we dropped. This is a reaction zone. So if price want to break it, okay, price will do what? Price will create a bullish week, but we start with a bearish Monday and then continue like this. Or it can start bullish to reverse and come back down here. Why? We have another target inside, internal range liquidity. This internal range liquidity will be what? Completion of a phase. We had retracement, expansion, retracement, expansion. Or this, if this is exhausted, then price will start by manipulating this. Why? Because they want everyone to think that the week will be bullish. So people will start buying here, putting their stop loss somewhere around here. And then price on Tuesday will reverse to take them all out, stop loss. You see? This is how it does. Now, if we go on Euro GBP, we had a very interesting price action because on these two, we know it's expansion. I don't want to trade, you see, a weekly expansion like this. I'm not very interested in trading retracements because it's very weaky. Sometimes I'm looking for a retracement or a consolidation, and then I will take when price break out of it. So here we just broke out. We're expecting to see a retracement. We have to wait, okay? On Euro GBP, I said it's very interesting. Why? Look at what the weekly does. The weekly candle does. It does create this is an indecision candle, this one. So I don't know what will happen, okay? We have to also look at our fundamentals sometime, even if we don't understand much, but it's important to understand what could happen. Maybe there's something coming from Europe or GBP, and you will see why the candle will go in the direction. But let's us analyze together. What phase are we in if we go on this candle? Let me go on the weekly, on the daily first, so we can understand. If you go here, we had a retracement, then we broke with an expansion lower, then we had what? a consolidation. What is this candle? Manipulation. And what happened? Reversal. So the reversal is about to break this level down here to go where? Let's go back on the weekly time frame and let's figure it out. Let's mark here. We have something inside the range. We have this level. It was tested already, but it left us with equal lows, which could be liquidity that we can target later. So now here I have a target. I can call it draw on liquidity, but me myself, I call it liquidity target. Why? Because I know where price is trying to go. The second thing that confirms my thesis is after this move, you can see that it was a big manipulation. We broke structure after taking all these highs here, and we respected this guy here, which is an external range liquidity. We respected it, and then we pulled price back inside, creating a retracement, okay? But before the retracement ends, because it was a retracement, and it started expanding, and then it broke down the beginning of an expansion. Now this is a reversal. So we are observing what price is doing, and we can notice that the wick here was a bearish doji. Let me call that so everyone can understand. It's a doji candle, but look at the size of the wick on this side, on the upside. The rejection is stronger on the upside. Why? Because price is about to be bearish and to continue bearish. So after all these bearish candles and trying to go up, and then market refuses, where did we reject this candle? We rejected from a key level. You can see it here. This is a key level. We can look for another key level. You will see that price respected the key level. We have one here, one here, one here, one here. This is where price rejected. You can see it here. So we know price is not coming back here. Price is going where now? Where there's liquidity. We have a liquidity target because we have an imbalance inside. Price will come to retest this imbalance, but also we have equal lows that I marked here. These equal lows are liquidity target. You can just mark equal lows so everyone can understand what they mean. You have equal lows here, and you also have trend liquidity. Everyone who was entering at this trend, they have their stop losses here. Stop loss here. Another one have a stop loss here. You see? And all these resting stop losses are just liquidity. For those who took their profit already, they are good. But all these people right now are in red. This guy is also in drawdown, and this guy also is in break even. So price want to take all of them out because institutions don't take trade on a 15-minute like us. They take trade on the daily time frame, weekly time frame. So they have to wait for a week to finish. But this candle here will come and take them all out. Why? Because we have so much liquidity down here. So Euro GBP, according to what we know, we close in breakout. After closing in breakout, what happened? Let me mark this like this with the blue line. After closing in breakout, what happened? We closed bearish and we target here. This candle here did not close either above or below. It stayed inside. We call this compression. Why? Price is compressing. Look, it's like we squeeze a sponge, compressing it down. Okay? It's like the spring. Oh, you call it a spring, right? This. If you press it down and then you let it, it will jump up or it will jump down according from where the force is coming from. If you have a compression like this, let me show you here. If you have a compression like this and you have a bearish pressure shown by this wick, where do you think price will explode? It will come down. Okay, so if I'm pulling and pushing at the same time, this guy will squeeze. But if I take off this force, the spring will do what? It will go down straight. Okay? That's what is happening on Euro GBP. So on the fundamentals, we will obviously want to see if Euro is stronger to know in which direction we can expect price to go, or GBP is stronger. But I guess GBP is stronger than Euro right now, because on any other pair, you can see that Euro is losing. So what we expect on Euro GBP is to see price drop. We are going to see price drop here because of the wick. Now, if we go on the daily time frame, what do you have? You have this rejection here. We just broke structure. Okay, let me take this out. We were bearish. We had a consolidation. Then we had a manipulation. And this is the change in direction that we are waiting for. As soon as Monday or Tuesday close bearish, we are going down straight to this point of interest, which I call imbalance or point of interest. Okay, you can call it as you want. I know you understand what it means. So now I have a target for Euro GBP. I'm not gonna buy Euro GBP. Why? The higher time frame is bearish. High, lower high, lower high. You see that? You have lower highs everywhere. Here, here, even this one that I marked, and lower lows. You are in a bearish trend. So if price is going down like this, I think it should finish first to take all this liquidity, reaching a reaction zone before we can see another bullish possibility. So on Euro GBP, we expect to see price continue bearish. Okay, so I will mark this just like this. And if we expect a bearish move, maybe Monday can start by opposing itself to manipulate everyone, and then from there price can drop. Okay, if we go on Euro AUD, big expansion, I don't want to trade this. We are inside of a range, rejecting. And if you mark your fib like this, we are right in the middle. We just broke structure. So it's logical to sell because we closed in a breakout. You can even try to observe it and try to test what I just told you. But there's two things that are stopping me to focus on this pair. First one is this. What is this? Demand zone. Why? Broke structure here and here. After breaking that structure, this was the last bearish candle that left. Price could react from here. It could take a bullish move or continue lower, react from this imbalance, and then bounce up. So now the imbalance will be the reaction zone, and we know now this low will be just liquidity to be taken out. It's not equal lows, it's just liquidity. Let me put it like this. Okay, this is just liquidity. And if price take liquidity, what price will do next is just to go in the other direction. But if we start the week like this, then we expect to see the week come and finish below here to complete the target, because we are going down to this discount zone. And this will then be our zone where we wait for price to react from. But as I see this, I know some of you know what that is. It's a cup. It's a bearish pattern. I don't trade patterns, but sometimes you can notice them and they can help you validate an idea as a confluence. So on Euro AUD, Euro GBP, I guess price is going down. Why? Because Euro is losing according to GBP and AUD. On Euro USD, we just finished an expansion. Knowing that we are going bearish on other pairs, maybe Euro USD will also go down like this. But like I told you, this is the last that I will focus on, because we just finished an expansion, and the next days could just be like this. It could just be like this one here. And these are very difficult to trade, okay, unless you scalp. But here on GA, same thing as G and as Euro AUD, we have GA here. If I grab this and go on the daily time frame, you can see we have started a pullback. Did you reach the target? I don't know. On the weekly time frame, I need to watch again how price will start the week. After I see how price started the week, I will know what to do on Tuesday or Wednesday and Thursday. So here I have a price reaching a zone. I did not see any reaction. But if Monday closed bullish, we know we are going bullish for a few days. Okay. But if Monday breakout here, we continue lower for the next target. Okay. So AUD USD expansion, NZD USD expansion. I'm not going to trade. I will wait and see. But NZD USD is inside of a zone. Okay. You see how almost every pair is inside of a zone. Okay. We need to wait for Monday and Tuesday to unfold so we know what we do. Let's go on GJ. GJ, oh, very good. Now you see, this is a very good example. Look at this. We had price going in expansion very strongly. After breaking these highs here, price continued expanding, and then it stopped. It started consolidating, and then we had a manipulation of the consolidation zone, but we did not close bearish yet, according to this. If I go on the daily now, I can see, you see how price broke, retraced inside, respected this level, but look at what the daily did. We are here rejecting from this external key level. We could target this internal key level after a few days. What did price do? Now you know. GJ, you will tell me. Just take notes in your books. We swept previous week high. Previous week is here. We already came back inside. We closed inside the range. Okay. This one, it was the one that initiated the bearish move. All this was just a retracement and take out liquidity. And then I'm expecting to see either this next candle to be another hesitation or a bearish move. So when I go on the daily time frame, you have it here. You can see how price retraced inside after taking out these highs and closing bearish. I'm expecting at 80% that next day, I mean Monday, will be bearish like this. I hope you're starting to see it. I hope this is what you also saw, because after rejecting this with a big wick closing in the direction to the downside, the intention is clear. We have reacted for this. We are going toward another liquidity zone. We had trend line liquidity here, and we have price that will continue lower. Why? Because we have something that can pull price. We move from external to internal. So the next coming days, I'm expecting to see a bearish day. If it's Monday, okay, good. Then maybe Monday will go like this. Tuesday will go like this. And remember, what was the weekly? Bullish. It means what? It means if we start like this, then the next day will probably go like this. And then Thursday and maybe Friday, an hesitation. This is just an example to show you how I believe price could print according to how it behaved before. Okay, so all this, let's just take it off. I'm expecting a bearish move on GBP JPY. And if I go there and think about the other GBP, I was expecting also a bearish week. So maybe they can synchronize at some point, and I will see how price will react. So GJ is bearish for the next coming days, and maybe still bullish for the weekly. On EJ, same thing, very good price action. You have rejection of the highs. On the weekly time frame, you have a bullish candle. And when you come back on the daily, price broke structure to the downside and closed bearish. So we are expecting price to continue lower until we take this low. So I'm gonna sell Monday or Tuesday on EJ. Okay, and USD CAD, I already showed you what price could do. The thing is, you should always remember the market phases. The market phases will help you understand what are we doing. Are we consolidating? Are we expanding? Are we in a retracement, or are we doing a reversal? When you have that, even if you're not accurate, you could find the best opportunity like this and then buy until you reach another level here. Then you stop for a while. Okay, Friday week will end. Then Monday we start bearish. You say, okay, maybe I should sell now. But you mark these highs. Price played around, stayed here. On Friday we had a reversal. Look at what price did. So now tomorrow, what we're expecting is a new week. Then maybe price will start up and then continue lower, or we will start down inside here and create a reversal like we did here, and then we can target the highest point. Okay, so this is the analysis that I have for the week. If you have any pair that you want to look at, just let me know. We can try to anticipate the candle together. Is there any question, guys? Oh, okay. You're welcome, my brother. So, oh, it's Dejeuner. Let me look at the second screen. Who said thank you? Oh, thank you. It's my sister, right? Dejeuner. Okay. Thank you. So I hope you understood what I said here. You think about, oh yeah, thank you, sister. So when you have this, you think about breakout and fake out. First of all, how did the previous candle close? I'm trying to focus on candle 1 and candle 2 because the candle I'm trying to guess, let me just call it guessing, I'm trying to anticipate, it's candle 3. So always be the candle 3. So you have to look back twice. If you are here, if you are this candle here, candle 2 is this one, and 1 is this one. But if you came on this day, this is candle 3, this is candle 2, and this is candle 1. And to help you understand if you should obey to the rule is if I close breakout, I continue. If I close and fake out, I change direction, opposing to the candle 1. If candle 2 is opposed to the candle 1, you go in the direction of candle 2. If candle 1 and candle 2 go to the same direction, you follow the direction of candle 2. Like here, you see? At some point you will be wrong because there's a reversal, but I just told you how to know when it will reverse or when it will change direction. You must think about internal range liquidity, which I can call imbalance, just to simplify it, and external range liquidity could be a rejection week or another block. If you think about it this way, it will be very hard for you to get trapped, okay? And when you have this, always ask yourself, what day are we? The day in the week is the day of the week is very important. Monday and Tuesday, most of the time will form the reversal of the week. They will give you when to enter to ride Tuesday or Wednesday, Thursday, Friday, and then avoid Friday, especially when there's news. Doesn't give you anything because sometimes market will just calm down and let people take out their position. But this candle I just showed here, this big candle, it was a Friday. So sometime when Monday, Tuesday, Wednesday, it's compressing, okay? Maybe you should expect an expansion on Friday after the news, but it's very risky because you don't know which direction you're gonna take. You can see here we were bearish, we closed inside bullish, it was a manipulation, then price came down. But you should know why, because you had this target. When this candle was forming, you had a target. Where did you come from? Because you come from external to internal, you have this. This is your internal range liquidity, which is an imbalance. And this one is a rejection week. So when you came here at that day, you only have one goal. I need to reach this level. Why? First of all, I'm bearish on higher time frame. Second, I rejected from this level here, and then I've just rejected from another internal range liquidity. I'm going here. So next day will be, this will not trick you because you know the target where you're going. We did not reach the target yet. Okay? And after this, you have your expansion and you take your trade. And that's how it happened almost every time. There's no strategy that's 100%, but this one about the direction, you will be right most of the time. You are right here, reverse here, here you, okay, stop out. Let me put it in red. Okay. And then you came back, right again. Every gray, it's right, right, right. Here, you expected to be bullish, but you were wrong again. You're just gonna count, and then here it's reversed. It's Tuesday, expecting the reverse of the week. Wednesday, we take a trade in the direction of Tuesday. Good. Thursday, trade. Friday here, we do not trade. Monday started bearish, means what? The week will be bullish. As soon as Tuesday turned, you have Wednesday, hesitation. Compression, what did I say before? Every time you see a compression, just be happy because after compression, you have an expansion. Compression is the consolidation, like I showed you here. When the spring is compressed, the part does not have enough force will be the one that will be attacked. So here we are bullish. Compression, sweep, boom, buy again, right. After compression on Thursday, Friday, we did not trade. Monday started bullish, pushing and breaking here, broke out of structure. What do we target? Highs. We were right on Tuesday. Then price consolidate, stayed inside, did not break the high or the low. We know something is fishy. We expect price to break lower. We have this target. As soon as we see here, we could have lost 1, 2, 3 trades. Okay, these 3 trades, we could have lost them. But then we continue bearish. We win again. Another win here, bearish. Another win, bearish. These are daily candles. If you go on the M30 and you try to find them, you will see that it's big moves. Even if you see the small candles, let me go here. You see? Bullish, 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 bullish. All this is, imagine you entered even if you risk 1%, how many times did you lose? So you don't need to care much about losing or winning when you're trying to find the direction on higher time frame. Okay, guys, you take care of this, breakout, fake out, ERL, and IRL, and ask yourself if it's Monday and Tuesday, so you don't trade in the wrong direction. And if you look at a basket of 3 or 4 pairs, you will always have opportunities. Okay, guys? So it's a very, very simple way to look at the market. And that's why you will always see me trade with, sorry, what did happen here? I don't know. Okay, let me show you. For example, this, I always trade with this indicator here, which is a free indicator, I think, on TradingView. You will just see that I put the daily, I put the H4, and I have my price action on M15. And I can find trade easily because I'm looking, okay, we're bullish, so I'm looking for a bullish. When the H4 and the daily will align, I will enter. Where was it? Here. It was here. So when it aligned, I will look for my reversal signs, and then I buy, I take all this. But my daily was bullish. I was expecting to continue higher. As soon as my H4 turned bullish, I was seeing it here on the M15, and price gave me, let me show you on M15. Let me show you the entry that I told you last time. It was the engulfment, the fractal engulfment. Let's go on H1. Let me show you. On H1, here we have a broken one. We have a broken engulfment, a ECR. The video is on YouTube. Everyone want to see it there. This is, let us call it SND, okay? It's a broken SND. So it's an ECR, engulfing candle range. It's engulfed. When price break it and come back, I will drop now on M30 or M15. My goal is to find the manipulation as soon as the H4 will change direction. Where is it? You can see how price swept here, here. All this happened in one day. So here, I can see price swept. This is Asia. You can see the square. I don't know if you can see it here. This is Asia, and this is London. And during London, price created a sweep and then broke structure. You can see on the line chart. On the line chart is visible. You had a sweep, then price came down and then push up. This is the break of structure. This break of structure, some people call it market structure shift, some other call it change of character. So when I have a change of character like this, what I will wait to see is another break. So the other break that I see, it's here, and it has to fall in my time. What time is it? 8:39 exactly. So when you come back on M15 and you look at the last move before we break, which was the bearish mode, before we break bullish here, and this is your entry. This is your entry. When you enter here, you are not catching only 8 hours of price action, but you'll catch also the day, because you know after the bullish day, you are expecting a bullish day. So when price start to create the lowest point of the day, you will see it on H4. And from H4, you can come and look on M15, where did the market sweep liquidity, and then where did it change direction? What was the last order block or supply or demand zone? And from here, you take a trade. Protect below the lowest point of the day, and you target up here. This is an 8.9 trade. After this, you just don't care about the week anymore. You just made your profit for the week. And it happened almost every time. I see it here. Rejection. This is a rejection. I'm used to it. So when I see a rejection like this, I already know the next day is bearish. I will mark the London high. And when price reverse on the London high, I will have myself enter here. And this is where I will take my entry. Whatever strategy you use is the same thing. You see? And if I go on the daily time frame of this, you will see that this was a bearish move, and then price rebalanced this bearish move. But if you come here, you will see we were bullish, bullish, bullish. Then it gave you a red day or a negative day, but you don't care. Why? Because on H4, you always know if H4 is not aligned with the daily, you don't trade. So whatever I taught you here, it was on the daily, but when you go on H4, and H4 is showing you the next candle should be bearish, 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 and you are waiting for a daily to be bullish, for example, you're not taking the trade. But as soon as you see price, okay, this is what? USD CAD, right? Let me, how many do I have? Okay, this one I will put daily H4. Let me see here. Okay. Where is my candle? Let me remove everything. This is the daily, right? And this is what? Oh, okay. So they're the same place. No, 60. And this one, 40. I'm just trying to put this so you can see the indicator that I'm talking about. But okay, no problem. Let's just keep the daily, and then I will copy and duplicate it. Paste. Now I have this, put it on 24. It's bugging. I don't understand. I should have another group of candle here, but I'm just showing you that on H4, at some point, oh, okay, they are here. All of them are here now. Let me put this and put a gray so you can see. You have this. You have the daily here. So the daily must be bearish, okay? Then as soon as the H4 turns bearish, around 1 p.m. or 1 a.m. or 5 a.m., you know the next candle will be in the same direction. That's how I found the direction. It's very easy. Okay? As soon as price shows you on the daily, I was expecting a bearish move, and on H4 it was still bullish, and then it's turned bearish. Now I'm looking for a trade. And if I go on M15, you can see it here. Let me put this one offset to 9 on the other side. Okay, good. And this one is good. This one also green. Okay, so now you have, look, where did this H4 happen to form? You see this? Let me mark the green candle. Do you see that? This is the green candle. Let me mark again the green candle. This is where the reversal happened. What does it show you? Asia session. As soon as London session turned bearish, after seeing the sweep here, what was the last move before the sweep? It was here. You can look at the line chart so you understand. The last move is here. Okay, the sweep is here. Now, on this leg, you are looking for a fair value gap or an imbalance. That's all you're looking for. And here you can see an imbalance. Okay, it's a good entry point. You can also take another block, which are called SND. And this SND will just give you an opportunity to sell. Why? Because now H4 here, M15 and the daily, they are all bearish. Time frame alignment. Now you can take a trade and sell, protect here. I will enter on my SND. Look at how big this trade is. Okay, and you can put a fix RR if you want, or you can target until the end of the day and close with profit. Okay, so this is how you're going to analyze it. So we are going to wait when the daily will align with the weekly, and then in that weekly we are looking for a H4 and an M15. Okay, So you have the weekly must be aligned with the daily, aligned with the H4, which we have here, the daily we have here, but you don't need this. You can look at them one by one. You can go on each time frame, and then you can enter on M15, which is here. Okay, guys. So thank you again. I think I took too much time, and I hope it's okay for you guys. So if there's any question or any pair, like I asked, okay, I didn't say anyone write anything, but these are the pairs that I will focus on. And then as the week is evolving, I will look at Monday and Tuesday, and then I will take off some of them because I'll be like, okay, GBP USD did not work, Euro USD did not work, and I will take them off just like that. But here I have my list, and I will keep them waiting for the reversal of the week so we can catch moves. This was just one day, but you can also see this as 1 week. So the first will be Monday, and then Tuesday, this Wednesday, Thursday, Friday. The candle forms the same way on every time frame. You don't actually care what time frame it is, but for us to have a reference in time and how to focus and frame our plan, we must focus on the weekly first to understand the direction of the weekly. And then on the daily, when it's aligned with the weekly, we come on the H4 and focus on M15 for our entry. Okay. Thank you. Thank you. Thank you. Thank you again. I'm going to stop the call. I think I will put this recording on YouTube, and yeah, I hope everyone got some value. Thank you again, everyone. Start your week with blessings and greatness. Stay positive and keep building, keep learning, and keep grinding. Okay, guys? Thank you again. Bye bye. Bye, everyone.